Yeah, so let's separate it into two groups. There's mega cap tech, which I think actually has a good correlation to just a recovery in the economy, cyclical stocks, even the 10-year. You see mega cap tech stocks move up as the 10-year yield moves up. But then there's the rest of tech. And the thesis there is if you think about once we get back to the pre-crisis level of GDP, then we start creating new growth. But we're going to do that with a smaller labor force. So how do we do that with a smaller labor force? We need them to be more productive. How do you boost productivity? Technology. So some of those smaller cap tech names, particularly things like software and services, are what are going to lead us after we get to the full recovery mode and we can create new real growth. Mega cap tech for now, again, to Joe's point, I wouldn't exit. It is what our economy is made up of today, but it's probably not going to see the outperformance that we've seen over the last 12 months.
New record for software. Speaking of the IGV hitting a new record intraday high today, the question then becomes, Jim, is it real? And does it have real legs? As you get further along in the recovery, you're going to have more conversation about the recovery trade and the value trade. But these stocks are simply saying, not so fast. Focus on where the consistent growth is, not where necessarily you're going to see some fits and starts as it relates to the economy getting back up again.
Well, so yes, it is real. I'm going to echo what Joe and Liz have said, that, I don't think it's binary. I don't think it's either you're in tech or you're out of tech. Scott, I own Apple, Google, Microsoft. I'm going to stick with them. They've been great. But you also know I have a lot of cyclical exposure, a lot of value stocks. And I've been consistent the last couple of weeks that saying the big cap tech is going to do just fine this year. But it's not, I don't think, going to be the market leader this year. It's had such a torrid run the last 2 years, frankly, the last 5 years. And when you look at the fundamental forces that are propelling either financials, which I know we're going to discuss a little bit later, or energy or industrials, just the fundamental forces of a new economic expansion, easy money, infrastructure spending that may come, just more economic activity in general. I think it's safe to say, I think it's rational to say that leadership this year will come from the cyclical value sectors, but tech is going to do just fine as well.
I want to focus on speaking of tech in the area I just mentioned, John, software. I mentioned the new record high. You've got some software exposure, as probably a lot of people do, because enterprise software has been one of the biggest outperformers within technology over the last year, certainly since the bottom. We've talked about it a lot because people like Brad Gerstner have come on our program and said that maybe some of the valuations have gotten a little ahead of themselves and need a bit of a reset, though month to date or year to date, I should better say, these stocks are going. Doc, ServiceNow is up 10.5%. Zoom, popular as ever, up 13.5% after a pullback of its own. Workday now 17%. CrowdStrike's having a nice run of it. You've got Oracle, which is a bit of a leader. You've got Palantir and some of these other names. So what about software?
I think software is going to be one of the areas that you do want to look for value there, Judge, as far as, some of these pullbacks, like that Oracle pullback, like the Palantir pullback. I mean, I think both of those gave you opportunities rather than just reaching for the stars and, grabbing some of these big names that have truly outperformed. I'll throw Zoom in there with it, Scott. They've made some pretty significant corrections, and I think that makes them all the more attractive right here because, again, in the case of Zoom, I know Josh has been long and strong in Zoom. It's come down from over 500 into the 300s. I think that was an opportunity to get in there. I don't know that it goes right back into the 500s, Scott, but I think that stock is something that people just have found that they really can't quite live without. Microsoft Teams is great. Google Meet is great. But for just regular Joes and Janes that don't have a software package that they pay for on a monthly basis, like with Microsoft, or that don't maybe trust as much Big Brother watching over them over at Google, I think you've got Zoom, and it has become like Kleenex. It has become like Xerox. It is what it is. I mean, it tells people what it does as far as it's become the name of how we communicate with each other. So I think of those that you mentioned and that I'm lucky enough to own, Zoom is one that can continue to outperform.
I want to know about Salesforce. You know, one of the marquee names, Jim Lebenthal, in the software space. I think a lot of people probably have that in their portfolios. And after a rest of its own, excuse me, a pullback, it's gotten going again, too.
So, the question when you see a pullback like this is whether it's a consolidation or the beginning of a downward trend. That's always the question. Since I recently initiated the position and added to it, I obviously think it's a consolidation. And there's a lot of things that we know here. We know Mark Benioff is a transformative leader, and that matters a lot. Frankly, the reason I got into it was the acquisition of Slack. I think that's both a great defensive and offensive play. Offensively, it gives them a new business line. Defensively, it keeps Microsoft Teams and Zoom from encroaching in on Salesforce's core business. So I see a transformative leader continuing to do transformative thing. And it's almost a verb now in its own right. I mean, is there any company that doesn't have Salesforce in it right now?